Okay, so I really need to talk to you about what's going on in China today, because this could turn out to be the genesis of the next global financial crisis. All right, so let's talk about it. Okay, so this story comes out of CNBC. China's property giant Evergrande files for bankruptcy protection in Manhattan court. China's heavily indebted property developer Evergrande Group on Thursday filed for Chapter 15 bankruptcy protection in a U.S. bankruptcy court. The world's most indebted property developer defaulted in 2021 and announced an offshore debt restructuring program in March. Property sector fallout. Evergrande's filing comes amid contagion fears that China's property sector troubles could spill over to other parts of the economy, which has already seen faltering growth. Most recently, Country Garden, which used to be one of China's largest developers, struggled to make coupon payments. Okay, so this bankruptcy filing by Evergrande is not really taking a whole lot of people by surprise, because the Evergrande saga has been going on now since 2021. But now we're starting to feel the contagion effects. Other Chinese property developers are starting to show similar problems, and this is starting to have a cascading effect. Not only is it revealing the Ponzi scheme that was the Chinese real estate market, but it's also starting to reveal issues with other major industries, namely the banking industry in China. Now, as the banking industry in China starts to struggle, we could see China starting to sell assets in order to shore up their balance sheets. And one of the asset classes on the chopping blocks are U.S. government securities. China is the second largest foreign owner of U.S. securities. And if they were to start dumping our securities, all of that is going to come flooding back to America. And that's going to exacerbate our own issues with inflation. Now, in addition to the problems that China has that we know about, China has announced recently that they're going to stop sharing critical economic data with the world. So now they're going to be shrouded in mystery. We cannot trust the numbers coming out of China. Now, China is the second largest economy in the world by GDP, right? As China falters, this is going to have a dramatic ripple effect throughout the world's economies. Now, the reason why I wanted to point this out to you is because not everything is right in the Kingdom of Denmark. That's a literary reference, not a literal reference, okay? And the institutional investor class out there is starting to wake up to what's going on in China. China's economic model is washed up on the beach, says veteran investor David Roach. Beijing has acknowledged its immediate economic headwinds and signaled more fiscal policy support, while the People's Bank of China unexpectedly cut interest rates on Tuesday. Roach, president and global strategist at Independent Strategy, told CNBC's Squawk Box Europe that global stock markets were failing to price in long-term decline in the role that manufacturing plays in powering emerging market economies. The Chinese model is clearly washed up on the beach with a huge number of legacy holes in it, and it's not going to take off again. They really don't have the approach to surgically get rid of bad debts and bad assets at the same time. They're not going to be able to rely on their traditional measures of growth. That's the big problem. Okay, so I'm not going to read the whole article, but you get it, right? The Chinese economic miracle is over. In essence, the entire Chinese economy is overpriced. Everything from its real estate to its banking and its manufacturing sector. Now, I know a lot of you don't pay any attention to what's going on in China, but I want to just make sure you're aware of this, because what's going on in China could be the landmine that could start a cascading effect throughout the global financial community. So, once again, my recommendation is reduce your exposure to your bank, put a bunch of your money into gold and silver, and establish streams of passive recurring income. Ed Anderson, live from Minnesota, signing out.
Copy that.